Okay, we are live. I want to first and foremost apologize. We had some technical issues. So, with technology, there occasionally comes issues. So thank you for bearing with us real quick. We have Pat Stone on the phone. He wasn't able to link in through the video feed. So first and foremost, I'd like to welcome everyone to the show. I'm Andy Green, the CEO and founder of Green Group Real Estate. And my co-host for today's show is Annie Ransom. She's the branch manager and senior mortgage advisor for All Pacific Mortgage. Hello, Annie.
Good morning, everyone.
Awesome. So our mission is to combat the negative media and give you the news that you can use to make smart decisions both now and as we come through the other side of this. So with no further ado, today we're joined by Pat Stone. Pat is the CEO and chairman of WFG Financial, and he leads approximately 550 employees in his company. He's the economist of choice for the real estate industry, and he calls Portland, Oregon his home. So we're very, very excited to have him today. Welcome, Pat.
Thank you, Andy. Delighted to be here.
Well, thank you. So since we're a little bit behind schedule, let's just jump into it. The first question that's I think on everybody's mind is because you're the economist of choice for the real estate industry, and I think you really keep your finger on the pulse. What's your forecast for the remainder of 2020 and into 2021 based on this current climate that we're in?
For the overall economy, Andy, I think we're going to have a fairly sharp contraction here. I like Jan Heitzis at Goldman Sachs is my favorite economist, and I've been on panels with Goldman Sachs people, so I like their methodology and their objectivity. And they're predicting that Q1 will be down 9% annualized, Q2 down 34% annualized, Q3 up 19% annualized, and Q4 up 12% for a net effect of about a minus 6.2% for the year. They're predicting 2021 up 5.5%. So real strong recovery, 2022 up 3.5%. Now breaking that down, when I say annualized, if you actually just look at the actual impact, the 34% decline in Q2 is actually really a 10% decline in the net economic activity. Okay. So it is very steep by historic standards. But what you're going to see is a very sharp contraction because basically we have shut the economy down. But they feel, and I agree with them, that you're going to see a tremendous recovery. And that's because you have a tremendous amount of pent-up demand. And, the naysayers and the doom forecasters are looking at things like you're operating from a net zero. But I will tell you that we're spending a lot less money in my household right now, and I suspect you are too.
Absolutely.
Overall, the country is basically accumulating a lot of pent-up demand that will manifest itself in consumption once the market turns, once people feel safe to go back out. Now a couple comments, if I may.
Sure, quick. Absolutely.
The Fed has done a marvelous job. I just tell you, I think they've done a great job of making sure that the credit markets didn't lock up all the way from corporate debt through mortgage debt. They've done whatever they can to ensure that the credit markets are going to stay functional. And, people were, I think, initially critical of them, and I think that's to people that don't understand what was happening. But the Fed has been tremendous. Now, it also was very happy with the CARES Act, $2.3 trillion stimulus. Really, and that came down to being focused, I think, importantly on expanding unemployment benefits. Obviously, there was a good part in there for companies and for states and fiscal aid and loan guarantees. It was really a very comprehensive initiative by the legislature. I think you're going to see another stimulus act come about that will be more about helping the states and about fiscal investment. So I'm confident that you're going to see a strong recovery. I think the demand is going to exceed most people's understanding of how things work, and I think we will be back and growing very nicely in the second half of the year and really noticeably next year.
Okay. Just a quick question about one of the things that you just said, though. So I understand that like we're not spending as much money with the employment rate increasing at the way that it is. How will that affect things?
Well, your unemployment will get up to about 10%,
Okay.
which is historically very, very, very high. But once you have demand, I mean, the bulk of the people that have been laid off are the people in the leisure and entertainment sector, hotel workers, restaurant workers, travel people.
Okay.
Once you have that demand back, a lot of those people are going to be hired back immediately.
Got it.
I mean, the only potential, the only quandary here, the only real question mark I have is, okay, if I'm a low income and my restaurant wants to hire me back, but I can stay on unemployment and get $1,000 a week, make more on unemployment than I was making at the restaurant for another couple of months. Am I going to take the job? There's a quandary there. You know, that is not the only downside I see in that. But I think you're going to see a tremendous amount of those people reemployed immediately at hotels and the travel industry, restaurants, and so forth. Still be some unemployment, yeah. Will unemployment still be high and work its way down? Yeah, but the bulk of that 10% will be reemployed very quickly.
Got it. Thank you.
And so based on the stimulus, I don't know, can you hear me okay, Pat?
Can you hear Annie?
Yeah, I can hear you too. Sure.
Okay. So based on the stimulus packages that you're talking about, I know you mentioned that there may be additional ones, but how do you foresee these stimulus packages affecting the economy as well as small business owners?
Well, I think they're going to be a real, let's be real honest here. The stimulus will do, as the money is actually dispersed, it will do some good. But the biggest impact was psychological right off the get-go, because it told everybody there's a safety net. And it's going to help people. Now, there needs to be a little bit more for small business owners, but the SBA loans and stimulus package gave a lot of small business owners some comfort that they're going to be able to get through this and they'll be able to function.
Great. What advice do you see yourself giving most often right now, Pat?
You know, stay safe, stay healthy. There's a couple models out there. What has happened in Asia and what we're seeing in some places where if you have social distancing, sheltering in place type rules, that this virus will peak and then the infection rate will drop. And I think if you see a significant drop over a couple of weeks, then we'll be able to re-engage. So I'm telling people, stay healthy, stay safe. I think if you're in the real estate industry, you're a realtor, stay in contact with the people you've been talking to, offer them advice on the market, on what's happening. Just maintain your business relationships, because business will return. And actually, I'm going to tell you something. Two things that are kind of interesting right now is we're seeing record amounts of refinance activity. Right. And that's good for the economy too, because that gives every individual that refinances some additional spending money. Yep. So that's very positive for the economy, and it is significant. I've never seen refi activity at this level. I mean, it's just stunning. And then the resale business, obviously, social distancing and the virus is going to impact resale very significantly, but it's going to be fairly short term. The demand is going to be there coming out the other side. The bulk of the 10% unemployment is again in the leisure and hospitality and travel industries. And I don't want to be cynical here, but I would suggest most of that unemployment is going to impact the overall home buying demand.
Okay. You said a second ago short term. You feel that this is going to be short term. What do you mean by that?
Well, if we I wish we would have had a federally mandated, shelter in place edict about 2 weeks ago, and we'd already be over the hump. But I'm suggesting that by the end of April we will see fairly significant drop in the infection rate, and by middle of May we'll be back engaged. By June we'll be operating at re-engaged almost fully economically.
Okay, great.
Awesome. So with the volatility with the markets, both in the mortgage industry and the real estate industry, what advice do you have right now for individual investors, whether they were considering prior to all of this getting into the real estate market, whether it be buying or selling? What would you say to those people at this point in time?
I think this is a timeout. What this is a timeout. I don't think the fundamental issues around your investment haven't changed in terms of supply, demand, so forth and so on. So I think this is more like a timeout. I personally am I haven't made any moves at all. I'm just considering this a timeout, and then I will re-engage when we get back out in the market.
So for the phone calls that Andy and I or other professionals in the mortgage and real estate industry, as we get clients calling and saying, well, I'm not sure whether or not I should buy right now, if they're in a position to do so, do you also have that same advice that they should hold tight, or should they continue on with that plan if they have the ability to do so?
I think it depends if you feel like interest rates are going to go any lower or not. I think interest rates will be attractive.
They are.
I mean,
they are.
I don't know that. Yeah. Here's what's going to happen on the other side, or what could happen on the other side. And I think people need to be cognizant of this. You're going to have demand exceeds supply for a lot of different things. One thing that happened with China shutting down is it disrupted the supply chain for most manufacturing globally. Just for your audience's perspective, 80% of all international trade is supply chain trade. It's a thing going from one country to another where it may be assembled in something given to another country where it's put into the final product. So if 80% of all global trade is supply chain trade, you've had that disrupted meaningfully already. So what impact does that have? What happens is, if you disrupt the supply chain, certain products and things become less available. And what happens when things are less available? The price goes up.
Right.
So I will be stunned if we do not have some inflationary pressure next year. I'm going to be stunned if we don't see, even starting this fall, if we don't see some price rises on certain products. How that manifests itself, or how dramatically that impacts interest rates, I don't know. I don't know how big the inflation will be. It may not be horrible at all, and I don't think it will be. My gut is it won't be terrible, but it'll be noticeable. So what I'm saying here in a long-winded way is interest rates are going to go up. They're not going to go down. They're going to go up. So if I'm a buyer and these interest rates are just incredible. I just refinanced my home. I had no intention of doing it. I had a great rate, and I just refinanced. I mean, you can't afford not to take advantage of these interest rates. That's what I would tell everybody. If you can execute it, I would execute.
Andy, what are interest rates at right now?
We're in the mid 3% right now.
Historically, that is unbelievable. That's awesome.
Unbelievable. Yes. So I think that's a really important message, is that, for the folks that are considering, whether or not this time right now, if you're in a position to buy, as Pat pointed out, take advantage of it. Take advantage of it while you can, because the opportunity may not be there 3, 6 months, 9 months from now, depending on when that supply and demand that he's referring to starts to happen.
Yeah. And as far as on the real estate side, there are so many precautions that have been put in place as far as showings go, open houses. The way we're doing business has completely changed. You can literally walk through a house virtually online, 360-degree tours, look at everything, walk through every section of the home, and then eliminate it, or say, yes, this is something that is of interest to me, and then go into the home while not touching anything, having hand sanitizing stations, like all sorts of stuff. So there are a lot of precautions that have been put in place. And at the same time, so you can take advantage, or if there's not a serious need, then maybe it is a timeout for you, right? Yep.
And I was, if I may, I would say that careful, sanitized environment extends all the way across the real estate process. Everybody's been doing a really good job of making it possible for people to engage safely.
Yeah, every title company that we've worked with, the precautions that they're putting in place have been phenomenal. I mean, we've gone to the extent that notaries have been looking at watching people sign in a car through a window, and that would be unheard of a year ago.
Right.
Right? It's crazy. Yep. So how do you see things impacting the Oregon economy specifically over the next, say, 6 months and then even into late next year?
Well, the timeout basically the timeout we're having will have an economic impact on Oregon, although I will give the state of Oregon credit for being one of the early shelter-in-place states, and we have not been impacted by the virus anywhere near the level of either Washington or California, even on a percentage of population basis. So I'm optimistic that Oregon will recover fairly quickly. We have a couple large corporations that I think will be able to re-engage fairly quickly. So I don't think I'm not really concerned about Oregon. I don't think it'll be as bad as in some places. I mean, places that it's really interesting to watch the places that are very dependent on tourism, like New Orleans and Las Vegas. They're having very difficult times now. Will they recover quickly? We'll see. I don't think they'll recover as quickly as Oregon does. We'll see.
Okay.
So, Pat, there's been a lot of buzz right now about these mortgage forbearances. How do you anticipate that's going to affect the mortgage and real estate industry?
Well, I think it's really good to see that level of concern for people that have been impacted by being unemployed, specifically the 10%, mostly again in leisure, travel, and entertainment. I'm glad to see that. I think if this doesn't go on past Q2, that won't be a big problem. If it goes on long term, then of course the whole scenario changes. But there's no reason to go on long term.
Right. Yep. Absolutely. Well, time will tell, right? We know a lot, and you certainly have provided a ton of information because I know this is your wheelhouse. But I'll be very curious to see. Oregon has done a really great job. A lot of our businesses and even the essential businesses around our area are taking extreme precautions. So it's great to see people taking this so serious. Because of course, the sooner that we take it serious, the sooner we can get back to normal. So I'm of course anxious, just like everybody else. But we'll see what happens as things progress. Knock on wood.
Yeah, interesting times.
There's if I may, just real quickly, and pardon me, I'm going to show just a little bit of cynicism here. I am very disappointed that we, as a country, don't have a historical perspective, because the Spanish flu gave us a model to follow. If you're familiar with the Spanish flu, I think there was 103 million people in the country at the time, 1918, 1919. We didn't attack it from a federal level because of potential. Because of World War I and the draft, and the federal government didn't want to acknowledge that we were having this pandemic. But out of 103 million people, over 650,000 people died. So that would be equivalent of about 2 million people today. But it was really interesting, if you look at it, that cities that did shelter in place and really did restrictive social interaction did fine. And Portland, Oregon was one of those cities. The cities that didn't, like Philadelphia, got killed. And excuse me, that's a very bad term. They got really impacted by that Spanish flu. So we had a model in place. Why it took so long to start doing it, I don't know.
Yeah. That makes sense. Well, we've taken up a lot of your time. Is there anything that you feel is important for our listeners, our audience to know or to be thinking about in today's crazy world that we're living in, Pat?
Yeah, specifically with real estate, I'd remind everybody out there that the demand exceeds supply. It has for the last 7-8 years and 9 years, and you've seen steady progression in prices because of it.
Yep.
That's not going to change. We are not going to have an abundance of supply. if we have a real severe downturn in some markets, you may see some price declines in places like San Francisco or LA or like that. But Portland, Oregon, the Oregon market in general, demand is going to exceed supply for as far as I can see in the future. So real estate is, I think, a solid investment at any level.
Yeah, we've actually been talking about that over the past couple of weeks between Annie and I on the show, and talking about the difference between the .com bubble and 9/11 and the impact that both of those had on the real estate industry. Since we've talked about that, and you're really the expert, what would you have to say about it? Those differences.
Well, I think that, the one thing that's really, two things I would point out, and I wish I had graphs to show you, but one thing is the level of equity versus debt in the residential real estate. In 2008, 2009, it was actually the percentage of equity versus debt was inverted. In other words, debt exceeded equity in our country. Today, equity is twice as much as debt. So we are financially much more solid in terms of ownership of real estate. The second thing I would point out is the price appreciation from about 2003 or 4 to 2009. Price appreciation exceeded job growth dramatically, and that's called a bubble. Today, price appreciation and job growth have run hand in hand for the last 8 or 9 years. So what we have in the market right now is a very solid pricing structure. If you go back and run it out over a 30-year period, it's running about 3.6%, which is where it should be. So I have no issue with the pricing right now, and I am very confident about the market.
Awesome. Annie, do you have any final thoughts here?
Well, I certainly feel better after having this conversation. So Pat, I just really appreciate your insight. Love your economic forecast meetings that you do each year. And I got to say, you've been pretty spot on for the 15 years that I've been in the industry, and the last several of those going to your economic forecast meetings. So I was really excited to chat with you this morning and just get some of your bits of knowledge on kind of the climate that we're in. So I just really appreciate that. And I hope that our listeners and people who are following along can see that value too.
Absolutely.
Thank you for having me. Think the world of you people, and delighted you're doing this. I think more information, decisions they can make. So thanks for having me.
That is our goal. That is our goal, my friend. Well, you have a great afternoon. Stay home. Enjoy your time with your family. Make the best of this. And we'll hope to see you and talk to you soon, okay?
Sounds good. Thanks, Andy.
Bye, Pat.
Thanks, Pat.
Bye-bye. Thank you, Andy. Bye-bye.
My pleasure. Bye-bye. Okay, so that was awesome. Pat Stone, we've been listening and paying attention to everything that Pat has to say for years. He is literally one of the best in the business, a great guy, a complete straight shooter based on everything that I've ever heard him say over the years. He doesn't sugarcoat things. He sees things, he analyzes, and he gives honest feedback, one way or the other. So Annie, thank you for joining us today again. Any parting words?
I mean, honestly, every time we meet, my parting words are always stay home, stay healthy so we can get out of this sooner rather than later. But my main takeaway from chatting with Pat is that, yes, we're seeing a disruption. We will see that disruption for a little while, but that will be okay. And I don't think it's as long as a lot of people are anticipating. So, focus on the positive news, connect with the people that are the professionals in this industry, that are connected with people that know good nuts of information. Stay away from that negative media because it has a tendency to drag you down. And we'll continue chipping away at this thing. We're only a few weeks away from what Pat's prediction is before things are up and running. So hunker down, and hopefully we'll see you soon in person.
Absolutely. I mean, we love these Zoom interviews, but in person is definitely more fun. I real quick, I have an analogy that I thought of as you were saying that. One thing that I talk to our clients about on a pretty consistent basis, because a question that we get a lot is, well, I don't have a home to move to, so I'm not really ready to sell. And what happens is the perfect home comes on the market. And this is true, real life. It happens on a consistent basis. The perfect house, they call me and they're like, Andy, the perfect house is on the market. We want to look at it. We go look at it. They write an offer. It's contingent upon them selling their house. There's another offer. They get outbid and their perfect house is gone. And so what I tell those people is and this is just a personal choice that they have, that sometimes, as painful as it is to move twice and to move into a rental and to have the flexibility to be able to move and jump on the perfect home when it comes on the market, sometimes that pain is worth it in the long run, because you look fast forward about 7-10 years and you look back at that time where you had to move twice. It was a complete pain in the butt and it was a lot of work, and you look back and it's just a blip on the radar. And it's really isn't as painful as most people think. And I think this time is the same. As hard as it is for us to stay inside, not be around people, stay safe, that long term, we look back 5 years from now and like, this time it sucked. And a month to 2 months of us isolating ourselves is going to be completely worth it. So, I really just thought about that comparison as you were talking. So I hope that
it's so true. Yeah. And I mean, I don't want to make it sound like it's not a big deal. Of course, it's a really big deal of what's happening. But that's such a great analogy, because I think as soon as we do come out, my husband always likes to say, winning fixes everything. And so we just need to get to the other side so that people can start winning again. And not that it's going to fix the heartache that the country and the world's gone through, but winning is what everybody needs. So a couple more weeks, we'll be there.
We are strong. We are strong, my friends. We've got this. We will come out the other side. We will be stronger. I believe that there's going to be a lot of good that's going to come through this. You learn more through failure than you do through successes and the good times. And this is hard right now for everybody. So we will get through this together. So everybody have a great afternoon. We'll look forward to the next time. Next Monday at 12:30, we will be back with new topics, new information, and new news that you can use to make really smart decisions based on where you're currently at and coming through the other side of this. So stay safe, my friends. Have a great afternoon. Annie, I will talk to you real soon, okay?
See you guys. Thank you.
Okay, bye.
Bye.